At Preqin, we've been looking at the alternative assets industry for more than 15 years, and we've seen huge changes in this time. A decade ago, there were 3,500 institutional investors actively investing in alternatives. Today, there are more than 3 times as many, about 11,000. This huge growth in appetite for alternatives by institutions, particularly investors like pension funds, has led to assets under management in the alternative assets industry growing nearly threefold to $8.8 trillion at the end of 2017. So after seeing huge changes in the alternative sector in the past decade and a half, we spent a lot of time thinking about what will happen in the future. Using our interviews with fund managers and investors, as well as analysing our own data, we predict that alternative investment managers will command approximately $14 trillion in assets in 2023. Investor demand will obviously be the fuel to this growth. 84% of the investors that we surveyed for our Future of Alternatives report said that they will increase their allocation to alternatives in the next 5 years. We also expect the current ecosystem of investors to evolve. Pension funds will remain significant, obviously, but managers are expecting 2 very different sources of capital to become vital to the growth of the alternatives industry. The first is private wealth. 65% of fund managers believe that family offices will become a more important source of capital by 2023. The second is sovereign wealth funds. 50% of managers predict these to become a more prominent source of capital. The investor map will also become more densely populated over the next 5 years. It will be geographically more diverse, with Asia in particular becoming a vital destination for managers fundraising in the next 5 years. In fact, Asia and other emerging markets were a key theme to emerge from our report beyond just where capital is being sourced. Eyes will be on China, India and emerging Asia, as well as Africa, regarding where LPs and GPs will be making investments over the next 5 years. Alongside this, we expect investors to build more complex portfolios of alternative assets. 3 years ago, 39% of investors had exposure to 3 or more alternative asset classes, and that's grown to 50% today. We expect investors to continue to add more alternative assets to their portfolios, with private debt being an area we expect to see a particular growth in. In fact, we expect assets in private debt funds to double by 2023. As our Future of Alternative report explores in more detail, technology will be a key factor in facilitating the growth of the alternative sector, to provide investors with new routes to market, to help managers transact and monitor portfolios, to reduce costs and to give investors more control and oversight of their portfolios. So it's been great to be part of this expansion in the alternative asset sector over the past 15 years, but now is really the start of an exciting new chapter. Whereas much of the growth in the past decade has been driven by large investors, particularly pension funds in the US and Europe, it may be the actions of the growing group of the mass affluent and those investors in the East that will trigger the next step in the evolution and growth of alternatives.